Hello again, today is Friday, April 26, 2019, and this is a market recap from MasterChartsTrading.com. So first of all, please hit the like button and subscribe to this channel. It's a relatively short program because I'm going to be more concise and try to just stick to the price action as much as possible. NASDAQ makes a new high and other major indices are quite close behind. Junk bonds and investment grade corporates hit new highs for the move. I think this is confirming bullish posture for stocks because junk bonds and to a lesser degree investment grade corporates do trade like more like stocks rather than bonds. And treasuries also are moving higher, so we have both bond and stock markets in a bull market. We'll look at euro versus US dollar, which is hitting new lows, and I think the reversal in US dollar is to be postponed for now. And we'll look at price action on gold, which is kind of difficult to read still, and I'm staying out for now. And we'll finish off with crypto price action. Okay, so let's look at S&P 500 briefly. This is a just an enormous move from the 26th of December low here to basically all-time high. Amazing, just amazing. Sometimes those things happen, and this was one of them. And we had an opportunity right there on the 5th of February. We went ahead and opened several positions. Myself, I opened the position. And also my retirement portfolios as well. So now we're approaching fresh highs, and this is obviously bullish for the stock market. Dow Jones also very close to fresh highs, so obviously you can say that this is a bull market in stocks, and basically anything of a sizable pullback, and I personally prefer a pullback towards the blue line. Now, with ETFs such as Dow Jones, DIA, QQQ, S&P 500, such deep pullbacks towards the blue line don't happen that often. That's why we also trade individual stocks. And, I'm not doing any reviews of individual stocks this weekend, but last weekend I did several. I reviewed several of the trades, so you can look up my previous week's videos. QQQ continuously making fresh record highs. This is again just Thursday, a fresh record high. This is an all-time high. Price has never been up here before, so this is obviously a bullish posture. So people say that, well, if they hit all-time highs, then shouldn't it pull back and shouldn't we see a reversal? Not really, no. I think the fact that we're hitting fresh highs is the only indicator we really need to know about, is that we are in a bull market. We should be looking for opportunities on any pullback. That's what we've been doing at MasterChartsTrading.com. Here on QQQ you can see a up arrow right there on the 13th of February. This is an actual alert, and another opportunity was right there on the 8th of March. You can clearly see a dip below the blue line. These lines are available for trading view. You can check them out at MasterChartsTrading.com. Overall, obviously, stock market is in a bull phase, and we should continue looking for buying opportunities. Junk bonds. So junk bonds and stocks move together in lockstep. You can see that we had a similar breakouts as S&P 500 here in January, and a big move higher. And this is another all-time high. Well, actually not all-time highs, but it's definitely a high for the move from the December lows. And then when I keep saying that stocks and junk bonds move together in lockstep, this is what I mean. They literally move together in lockstep. So a fresh high for the junk bonds together with fresh highs for some of the indices, the stock indices, is a good sign. It is showing good appetite for risk by the investors. Another interesting chart is LQD, and this is a investment grade corporate bonds. So also to a degree they trade more like stocks because of the kind of lower grade of the corporate bonds versus, let's say, treasuries. But you can see that alert was sent to my subscribers right there in January, and big move to fresh all-time highs. And you know that bonds don't move as much, so this is a very nice big move for this particular security. And again, since the investment grade corporate debt is gaining in price, I think this is a good sign because it's showing good appetite for risk by the investors. TLT, I'm still holding my position. I opened right there on the 11th of January, or the 10th of, yes, 11th of January. Kind of sat through this meandering. This is another alert right there on the 4th of March 2019, which just took off. I went ahead and I sold half of my position and moved my stop to above entry. So this is one of the kind of biggest things that I keep preaching to my subscribers, is that you don't need to make a huge profit each time, but you need to make a consistent profit, and preferably as many transactions should be profitable. Even if it's a small profit, it will be still easier for you to trade. Because if you have losses on your hand, you will be kind of like psychologically also beaten down. So you will feel much better if you have more wins on your hand. And this is what I'm doing. You know, I'm basically looking for an opportunity around the blue line, and there was the opportunity. You can find out more about these indicators if you're interested. Went ahead and I bought it, set through this drawdown, and then I just sold half my position, moved my stop to entry, and I'm still trailing it higher because it could continue higher. We don't know. So this is basically what I'm saying is as long as you have continuously making profits, even if it's a small profit, you can't really go wrong, because this is the whole point of this business. Business of trading is to make a profit. In this case, we're making a profit from trading of various securities. Let's continue to various forex securities. Now, we do trade this at MasterCharts Trading. I haven't traded this particular one in a while, euro versus US dollar. The latest greatest opportunity, honestly, was around the red line back in September. And this was just a tremendous opportunity to sell, to short. So if you open it back here, congratulations, you had just a beautiful move in your favor. And notice that we're continuously making new lows. So I keep telling my subscribers that, oh, notice that the indicators are kind of getting closer together. Here's what I mean. Back here, you can see the price range was like huge. It was 828 pips, or 7.25%, between the green and the yellow lines. But now, the same price range is only 585 pips, or 4.95%. So when this happens, the trading range narrows, and the price, it becomes easier for the price to reverse. So for me, reversal would have been a close above the blue line, in this case 1.16. But notice it never occurred, and we continuously made fresh lows, fresh lows, fresh lows. If you were an aggressive trader, you could have shorted here at the yellow line, and you would have been correct and successful. So right this instant, it's just really weird situation where gold, well, actually now it's becoming a little bit less weird. No, it's still weird because right now we have US dollar gaining on price, and as I will show in a few minutes, gold is also all of a sudden started to gain on price. So right now we have a strange situation with gold and dollar, and I am reluctant to trade it, honestly. Here's DXY, or dollar currency index, and it's like over 50% euro, and since euro just made a fresh low, it makes sense that the dollar index made a fresh high. And here's gold. Gold price action is a little bit confusing currently because dollar is gaining, and you can see that this is a currency pair called XAU over USD. So if US dollar is gaining, shouldn't this pair continue lower? It's not. It's actually kind of trying to bottom here around the blue line, and then maybe it'll continue higher. That's why I'm reluctant to trade it currently. You can see that we had a couple of very nice alerts here. These are actual alerts. One was sent on 3rd of January 2019, another one on the 8th of March, and they were both successful. Here back in early April and even now, I did not send any alerts because I'm just not, I don't really like this price action on euro and gold. Currently I'm a little reluctant. I'm just reluctant to trade it, basically. And it's okay to do that because you have so many securities out there. You can trade hundreds, if not thousands, of stocks, hundreds, if not thousands, of ETFs. There are foreign ETFs, and etc., etc. We trade a lot of those, so there's always an opportunity. You don't have to continuously trade, only gold. I mean, some people do, but I just personally don't like it. I like to have more options for myself. Here's gold miners, junior gold miners rather, GDXJ, and this one really unraveled. Took a dive and notice where the price is currently below the red line, actually. And this is, to me, not a good sign, so I'm avoiding GDXJ for now. Notice that the previous two trades were obviously successful. You could have made plenty of money on these trades. Finally, let's wrap up with Bitcoin and I believe Ethereum. So let's look at Bitcoin. Bitcoin is approaching breakout levels. You can see breakout levels right there on this chart. It's a blue line at $6,073. I think if we close above this blue line, then we can expect the security to continue. And in fact, this is kind of like a trend change. So before, you can see we had a trend down. Actually, let me go back a little bit for Bitcoin. So trend down began right there. Bear market in Bitcoin began on February 4th, 2018. And from then on, we basically only short, sell, sell, sell. Had just tremendous opportunities here to sell. Finally, you can see that very recently, price action has been a little bit more bullish. You can see a close above the red line. Let me zoom into this price action so you see what I'm saying. And you can see a breakout right there on the 6th of April above the red line. So far, this red line has been acting as a support, and it's approaching breakout level into the bullish phase. And the bullish phase, again, is at around $6,000. So at that point, we'll begin looking for buying opportunities for Bitcoin. Okay, that's it for this week's recap. Please head over to MasterChartsTrading.com, sign up, click on alerts and indicators, and sign up for one of the access, for one of the plans. Now, all of the plans have a risk-free trial, no charge if you cancel within 30 days, and I can cancel immediately. It's not a problem. Just send me an email. So if you get alerts, then you will see things of this nature, like, for example, here's Dow Jones or QQQ, and this type of alerts where we see breakouts or pullbacks towards the blue line. So this I actually send to each day, and on the weekends you also get the more in-depth recap. And then also you can get trading indicators. So the trading indicators are available currently for TradingView, and you can go to tradingview.com and look for me at MasterCharts. And you can also chat with me right there if you have an account. If you don't, just open. It's free. TradingView.com is a free account, and you can once you open it and you sign up with me, you can get these indicators, these 4 lines on the chart, the green, the blue, the red, and the yellow. You can see them on your chart as well once you sign up, and I'll open the door for you. So those are the trading indicators, and of course the best value is to get both. The prices did go up, so now we have just the alerts is $24.95, the indicator is $29.95, but both is at $34.95. So this is a killer deal. I think this price is most likely will be going up as well. So do hurry up and lock in these low prices, especially at the yearly. It's a killer deal. Alright, that's it for this week's recap. Thanks for watching and have another great trading week. Bye-bye.